Welcome to Smart Dollar Mindset, the channel dedicated to helping you achieve financial freedom with smart money habits and investing. Today, we're tackling a question that millions of people ask: should I use a credit card or a debit card? Both cards are pieces of plastic or metal that fit in your wallet. Both let you swipe, tap, and pay for things. But beyond the surface, they work very differently. And the card you choose can make a huge difference in your financial life. Credit cards can help you build credit, earn rewards, and offer strong protections, but they can also lead you into a debt spiral if misused. Debit cards keep you connected to your own money and prevent debt, but they often come with fewer perks and less protection. So, which one should you use? The answer is, it depends on your financial goals and how disciplined you are. This video will break everything down for you. What's the difference between a credit card and a debit card? The pros and cons of each. Which is better for building wealth? Real-life examples of where each card shines, and where it falls short. My step-by-step strategy for using both responsibly. Stick with me because by the end, you'll know exactly which card to use and when, so you can stay in control of your money and never fall into the trap of financial stress. Let's dive in. What is a credit card? A credit card is a financial tool that lets you borrow money from a bank or lender up to a certain limit, known as your credit limit. You can use this borrowed money to pay for goods and services, and you promise to pay it back later. Key points about credit cards. You're borrowing money, not spending your own. If you pay your balance in full each month, you avoid interest. If you carry a balance, you pay interest, usually at very high rates. Credit cards are part of a revolving credit system. When you make a payment, that amount becomes available again for future use. How a credit card transaction works: you swipe your card at a store. The merchant sends the request to your credit card network, Visa, MasterCard, etc. The bank approves the transaction and pays the merchant. You now owe the bank. At the end of your billing cycle, you receive a statement showing what you owe. If you pay in full, you owe nothing extra. If you pay less than the full amount, you'll owe interest on the remaining balance. Credit card features APR, annual percentage rate, interest charged on unpaid balances, rewards, cashback, points, or travel miles. Fraud protection, usually very strong. Credit score impact, responsible use builds credit history. Example: you buy a $1,000 laptop on a credit card with a 20% April. If you pay it off within 30 days, you owe $1,000. But if you only make minimum payments, that laptop could cost you $1,500 or more by the time it's paid off. What is a debit card? A debit card is linked directly to your checking account. When you swipe it, the money comes out of your bank account immediately. There is no borrowing, no credit limit, and no interest because you're spending your own money. How a debit card transaction works: you swipe your debit card. The bank checks if you have enough funds. The money is deducted from your account right away. Debit card features no interest. You can't spend more than you have unless you have overdraft protection. Limited fraud protection. Most banks protect against fraud, but it can take time to recover lost money. No credit building. Using a debit card doesn't impact your credit score. No rewards. Usually, most debit cards don't offer significant perks. Example: you buy the same $1,000 laptop using a debit card. The money leaves your account immediately. You can't overspend because you're limited to the funds you already have. Credit card versus debit card. The big differences. 1. Risk of debt. Credit card, high if misused. Debit card, low because you spend your own money. 2. Credit building. Credit card, great for building credit if paid in full on time. Debit card, does nothing for your credit history. 3. Rewards. Credit card, often offers cash back, points, or miles. Debit card, usually no rewards. 4. Fraud protection. Credit card, strong, charges can often be reversed quickly. Debit card, weaker, money leaves your account immediately, and it can take time to resolve disputes. 5. Fees. Credit card, possible annual fees, late payment fees, interest charges. Debit card, possible overdraft fees or ATM charges. Benefits of credit cards: build your credit score. Earn rewards and cash back. Better fraud protection. Can be used for big purchases and emergencies. Risks of credit cards: high interest if you carry a balance. Easy to overspend. Can lead to long-term debt. Benefits of debit cards: no risk of interest or debt. Great for people who want to control spending. Simple and straightforward. Risks of debit cards: no credit score benefits. Less fraud protection. Fewer perks or rewards. Which should you use? The short answer: both can work, if you use them correctly. If you're disciplined and pay your balance in full every month, a credit card can offer more benefits, rewards, credit building, and strong fraud protection. If you struggle with overspending or don't trust yourself yet, a debit card might be the better choice because it forces you to live within your means. My recommendation: a smart strategy. Start with a debit card if you're new to managing money. Learn to budget and track spending. Graduate to a credit card when you're confident you can pay your bill in full every month. Use credit cards for rewards and protection, but never carry a balance. Always track your spending no matter which card you use. Real life examples: someone who uses a credit card responsibly earns $500 a year in cash back and builds an 800 credit score, which helps them qualify for a low interest mortgage. Someone who misuses a credit card racks up $5,000 in debt at 20% APR and ends up paying hundreds in interest. Someone who uses only a debit card never builds credit, making it harder to get approved for a car loan or home purchase. Final thoughts: the debate between credit cards and debit cards isn't about which card is good or bad. It's about which one fits your financial habits, goals, and discipline level. Credit cards can be powerful tools for building credit, earning rewards, and adding extra security to your purchases. But they come with responsibility. If you carry a balance or overspend, they can become a financial trap that sets you back for years. Debit cards are safe, simple, and debt-free. They're a great choice for people who want control and don't want the temptation of borrowing. But they also lack the perks and credit-building power of credit cards. Here's the truth: you don't have to choose one forever. Start with what keeps you safe and in control. If that's a debit card, great. Once you've built strong habits, consider adding a credit card for the benefits, but never as a crutch to live beyond your means. Financial freedom comes from mastering money, not letting money master you. So whichever card you choose, make sure it serves your goals, not the other way around. If this video helped you, make sure to hit that like button, subscribe to Smart Dollar Mindset, and share this with someone who needs clarity on credit versus debit. Check out our other videos on building wealth, smart budgeting, and investing strategies that can set you free.